Are you looking for monthly income from the booming world of crypto without actually owning crypto directly? Today, we're going to break down the CONY, the YieldMax Coinbase option income strategy. I'll explain how it works, what makes it different, and whether it's a good fit for your portfolio. Welcome back to the channel. I'm Doug, the retirement guy with all the monthly ETFs. We feel that we got a strong little program here for you for the YieldMax coin, and it really explains everything you need to do. Before we get into it, I gotta say, hey, shout out to all the 1,400 plus people who have already subscribed to our new channel. We appreciate it. We welcome you, and we love having you here, part of it. If you're not a member, don't be afraid to hit that subscribe button. Also hit that bell notification so that you know that every time we put a video out, it's there for you to read to help you try to grow your pocketbook. Let's get into today's video. Notice to all viewers, past performance does not guarantee future results. The information provided in this video is for educational and informational purposes only. So if you need any financial help, always contact a financial advisor. So who is CONY? Well, it's YieldMax's Coin Option Income ETF. The YieldMax Coin Operation Income is actively managed, and it's an exchange-traded fund that aims to generate monthly income from employing a synthetic covered call strategy on Coinbase Global. This strategy involves selling call options on coin to collect premiums, which are then distributed to the shareholders. We see this option across the board. We see this very common with a lot of the weeklies. We see it with a lot of the monthlies, that they do this selling of call options, put options, and now they're doing a lot of this synthetic, and we'll explain that in a little bit here. So while this basically gets into the high income potential, it caps the upside potential of a fund. And this is what a lot of people don't understand, and they don't scratch their head, why is the fund not going up? Because you're capped your upside, that you're basically saying that if I'm going to sell this share of stock and I'm going to sell it for $10, if the share goes up to $12, you don't get that extra 2, you sold it for 10. So you don't always get that big upside side of it, but what you do gain is all the income from those things. Now, coin has been basically out here since August 14th of 2023. So it's one of the seniors out there. You know, we're 2 years old with it. So there is some history that we can look at across the board. So how does the fund work? Well, synthetic exposure to coin. So let me explain this here. Coin uses derivatives, is like swapping or swaps or options, is to replicate the exposure of coin without necessarily holding the underlying shares. This allows investors to gain exposure to coin without the price movements indirectly. So they're doing different things. They will use collaterals to say, hey, look, I'll buy your coin shares, and I'm using this collateral that if I need them, I can buy them, but here's my collateral to get them. But they don't have to buy directly. So it's a neat way that they don't have to be paying the money up front. It's almost like, hey, you have it, I'll sell it, and if I don't sell it, well, I'll end up getting it. You know, I'll give you some bonus money for it. The cover call strategy option, the fund sells call options on coin or the synthetic equivalent. By selling the calls, the fund collects premiums. If you don't know how they do that, basically what they'll say again is, I will sell my options at $10, but to get that, you pay $1 for that option choice. And at the end of the option, if you want to buy, great, you get them for $10. If you don't, I still keep my $1. So that's how you generate income from this stuff. So this is what gives them the monthly distributions, and that's really coming from the call strategy of what they're selling it for. Selling the calls caps the upside. We already talked about that if you set it at $10, you're not going to get 12. You're going to buy it and get it for 10. If the coin stock rises above the strike price, the fund can't fully participate in those gains. And the income generation, the option premiums are collected regularly and distributed to investors monthly. This is why COI can provide high yields even when COI doesn't then pays a dividend. So I always call it, it's the best of both worlds. Okay, you're not going to, coin directly. You go buy coin yourself. You're not getting any dividends. You're just praying that the coin value goes up so you can generate some growth. While with CONY, you're actually doing the same thing, but you're also getting a dividend from it. So we take a look at the performance of it, and I call CONY as flatten. And what I mean by that is you can see that since early August, this thing's pretty much just been a flat line across the board. The performance for 1 month, it's up 4.78%. It's down in 6 months, it's down 17.82, and year to date, it's down 47.8. Now, those are some big NAV erosions there. And the reason for it is during August and really heavily in September, there has been very low volatility in Bitcoin, which is part of the coin package. When there's low volatility, two things are going to happen. You're not going to sell your options. Okay, so when you're not selling your options, the price of the value will definitely rise. But if you're not selling those and you're keeping all your, your stock and your funds and your derivatives and all that, if you're keeping that in your pocket, your value will definitely go up. But are people buying your options and collecting that? And they've done well with very little volatility. When this thing has high volatility, that you look back in the March through May period when there's big volatility, we will show you that there was huge dividends. Okay, but right now we probably won't see big dividends, but we're seeing value gaining into the fund. And as you go through right now, it's like I said, we look at back in the February, March, April, May, we're looking at 65, 70 cents in dividends. Well, today we're paying about 45. So the dividends have dipped down some. I'm not going to say I'm panicking about this or worried about this. It has come down, but there's been no volatility to speak of in the Coinbase program. Now, with the interest rates changing, will that change the Coinbase? We don't know. What is going to happen? What's going to create volatility? A lot of it's got to do with people being panicked, people being afraid of what's going on. So the dividend actually, if you tally it all up, is 155.53%. That is huge. It's a huge dividend. And I'm only looking at the current time of this, August, September. But you take a look at this over a 12-month period, you have huge dividends across the board. So that's how you get that 155% is a 12-month package. So over 12 months, it pays huge dividends. Right now, it's averaging about 64 cents per month. Now, you can see the past 2 months, it's been well below the 64 cents, and it's starting to bring that number down. But because we had such big ones for the previous months, it's going to hold that 60-plus cent racket probably at least for a couple more months. So let's take a look at the performance and yield over as a summary across the board. And that is, we have a dividend yield of 155. We have a growth fund of negative 47.80. That gives us a total return of 107.63%. I am excited and ecstatic about having 107%. That is definitely strong, but you got to be able to suck it up and say, hey, we're going to be dropping our NAV. We're going to be losing a lot of value to this unless you buy at perfect right times. And that's what we really have to watch out for. But there's some big potential with this in buying properly. Now, the average dividend price, like I said, is 64 cents. So you got some good money to work with across the board. Now, the tax considerations. I'd hate to say that we're going to sit here and lose 40% of our NAV, and then we're collecting 155% dividends, and we got to pay taxes on those dividends. But here's what it is. The important tax treatment of YieldMax funds, especially coin, CONY, they're classified as return of capital. Now, what does that mean? Now, I've done a video on this before. We're very clear and very straightforward with this. The lower immediate tax bill. The distributions that are return of capital are not taxed in the year received, unlike ordinary dividends or interest. They instead reduce your cost basis in the ETF shares. So what it's really saying is exactly what it says, return of your own capital. So if you bought a share for $100 and it pays a $10 dividend, that $10 will come off the price of your share, which on your books. The books will say you now only owe you have $90 for those investment, and your $10 went in your pocket. There's no taxes deserved there. So basically what it is, and you do that over a long period of time, and then you don't pay taxes until you actually sell the fund, or you hit zero, and then you're going to pay long-term dividends, capital gains on those dividends, which are a much, much lower tax rate. Now, I know we're going to get off subject here a little bit, that it gets crazy. This is why I always tell everybody, talk to a tax advisor. Always have a tax advisor you can talk to about this stuff, because the experts have to know, because these things change all the time. But the potential deferring of the taxes, because ROC isn't taxed immediately, you can defer your tax liability until you sell your shares, or until the ROC distributions exceed their costs, as I explained. Capital gains or losses on a sale reflect an adjustment of the basis. Once you do sell, your adjusted lower base may lead to a larger capital gain or a smaller loss, depending on your sale. So basically what it says is, if you take a year from now and you go ahead and sell it, and you sell it for a loss, well, you got some capital gains that came back to it, so you're going to add a little bit more to the pot. But it's a neat little system that they use. A lot of the ETFs are doing it. YieldMax uses it heavily. A lot of them use it. So it's a strong piece. I would highly suggest you talk to your tax advisor for even more clarity, or watch our video. We do a very good job of explaining that. All right, let's talk about the forecast of CONY. Now, this is where I get a little queasy, a little questioning. I'm just on the fence a little bit here. It's 3 months out. Looking over the next 90 days, everything I read comes back and says it's likely to be sideways or down, or the volatile movement. Basically, what they're saying there is we could see this thing rocket if the volatility comes in back. The price may struggle to stay above that 650 to 850 range. And I think is doing this video now, I think the price is about $7, $7.01, somewhere in there. If the coin stock or the crypto markets are weak, coin may decline further. And that's what we're really seeing, that the crypto markets are actually, I'm going to call them weak. There's not a lot of volatility. They're just kind of just sitting, hovering, like trying to figure out what we want to do. Do we want to rock it up? Do we want to stay down? Where do we want to go? It's not telling us where it wants to be. That's why we're seeing this thing bouncing a little bit, trying to hold its point in that $7 range, but it's struggling to do that. You've seen earlier that it's up 4% this month alone. That's because YieldMax has done some good things with holding on to their the value into the fund. How long can they hold that? By the end of 25, though, it's a mixed possibility. If conditions are favorable, some upside, perhaps reclaiming some middle range levels around that $10, $12 mark, but it's not guaranteed. And I know some people are saying, "Oh, you're fictitious. It's going to be up to 10." I'm just giving you what I'm reading and all of every little financial side of it that we do our research with and dig into it. It could go up to that $10 to $12 range. If it continues in the downward, it's risk of further losses. So realistically, all we're looking for here, and this is why I put a warning out there, the forecast doesn't look as strong as I would like to see it. It looks like this thing's going to continue to drop slowly down to a certain point. Now they say it's staying above 650. I'm thinking this thing's probably going to get down more to that $5 range, to be honest with you. That's just my call. That's just me making a clear, looking at things and saying, I'm going to make a decision. This will probably get down to a closer $5 range. So it all comes into, if we start seeing the crypto and the stock market start to have some volatility, then we're probably going to see some big changes to this thing. So the return on investment, now we start looking. I've told this many a times. I am a person who buys, and I am a return on investment type person. I do this with all of my funds. So CONY, the return on investment, the new dividend of 45 cents puts that new average of 64 cents. So if you're questioning what a return on investment really is, I'll explain it to you right here. If you take the share price today of $7.01 and you divide it by the average dividend, it will come back and tell you how quick and how soon can you get your money back from your investment. So right here, this one is, you do the division, it'll come out in 11 months. I'll have all my money back from CONY. After that, if the fund goes down to $1, I don't really care because I'm collecting the dividends. Now, the big question when you do this stuff is, does the average hold? Will you hold that 64 cents to keep you in that 11-month period? And that's the big challenge with a lot of these. That's why you look at the forecast. You look out 3, 4, 5 months. What's going on? How is it going to happen? What will happen? I think right now, I think the dividend's going to continue to drop a little bit unless we get that volatility. Now, volatility can come tomorrow, but you don't know that. So in summary, I put a hold on CONY. I'm not a buyer of this one. Let's hold and watch the market right now. I'm not worried about anything of the infrastructure of YieldMax's fund. You know, $1.4 billion they have in assets to generate those incomes. The return on investment is great at 11 months. When we look at the returns of 4.78 in 1 month, down 17% in 6 months, the 6 month scares me. The 4.78 in growth is another positive. So right now I have 3 positives with 1 big negative. The income is $10.90 over a 12-month period. The average is, again, 64 cents. So these numbers all look good to me. Another positive. But tell you what, it's that forecast that holds me and puts me on a hold. It looks like it's going to drop more. So I'm not going to jump in on this at $7. I probably wouldn't drop onto this until probably closer to that 550 range. But it really has to tell me that we're starting to see some volatility. We start to see some better forecasting, that we're going to see some change to this. And that's when I would be excited about saying, okay, let's buy here and move forward. So right now, I'm not a buyer on coin. I'm kind of like sit back, relax, and if you own it, hold it, let it ride itself out. If you're not into it, hold off, don't get into it. And other than that, that's where I would sit. I'm not even a seller of it. I wouldn't say sell. I'd just keep collecting your dividends that we're getting currently. So what are your thoughts? Is it a buy, sell, or hold? Hey guys, it's Doug the Retirement Guy with the monthly ETFs. If you like what we're doing, hit that like button. If you're not a member, hit that subscribe. And also, leave your comments. Tell us what you guys think, the buy, sell, or hold. Also, we've added this site to the Patreon side. So if you're out there and you want some more information, join the Patreon. It's free. And if if you can and you like what you're seeing, go ahead and support us. It's small. I think it's $3 on one side, and it just helps support the channel, keeps us rolling. So we appreciate your time, and we'll see you next time.